Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables week after week after week. This is the 483rd session. We started back in 2008 as an experiment, and that experiment led us to founding the full-fledged 1Mby1M program in 2010. So the full program has now been in action for a decade. So we've collected a tremendous amount of experience in working with entrepreneurs. This event is being recorded. Every single recording of every single roundtable is available on our 1M1M Roundtables YouTube channel. This is a case study-based program. We try to bring you as many case studies as possible through our various different touch points. And these roundtables, as you will see, you will get to listen to the discussions around the pitches of several entrepreneurs. And that's also the reason we do that in public, is to give you a sense of, these case studies and how to think about businesses, how to strategize, etc. You learn a lot from listening to these discussions and strategy sessions. So go listen to the recordings if you have time. And on the blog, you will see Entrepreneur Journeys, which is our flagship series. We have over 1,000 successful entrepreneur journeys. These are case studies as well, successful entrepreneur case studies. That includes 100+ unicorns, 400+ bootstrap case studies, and 400+ venture-funded case studies. So that's another body of work that if you have time right now in the middle of this lockdown, you're very welcome to spend time on the website and learn from people who've done it before. If you're live tweeting today, the hashtag is 1M1M, and you can join us on Twitter at 1M1M and at Romana. We publish a lot of interesting, enriching content there. This is a roundtable, not a broadcast, so we do want to talk to you as much as possible. Please use the public chat during the scheduled programming. We have 1 investor interview and 4 entrepreneur pitches. That's the scheduled programming today. And then I'll open the line up for audience Q&A, and you'll have a chance to weigh in. In the meantime, use the public chat. We will start today's session with a conversation with Nick Adams, Managing Partner and Co-founder of Differential Ventures. Nick, welcome to the show.
Great, thanks, good to be here.
Nick, tell us a bit about yourself as well as about Differential Ventures. Let's get you acquainted with our audience.
Yeah, sure. So, at the high level, our fund is a seed stage fund. We usually invest somewhere around $250,000 to $1 million for our first check into pretty early stage companies. We have a heavy focus on the data science, AI, machine learning world, particularly with B2B applications. So we don't do a whole lot on the consumer side of things. But in the enterprise, we're really looking at how data can transform the way businesses will operate in the future. And then for my personal background, that's I came up through the startup world. So I spent about 15 years in startups of different sizes and different varieties, mostly with a focus on enterprise sales, marketing, and product management. I kind of did everything from launching the U.S. operations for a company based in Europe to working with a hugely successful back then big data company called Opower, and then later on running a team in India and launching a natural language processing engine for a company called Rage Frameworks out of Boston. That was later acquired by Genpact. So that's my background, and my other 2 partners have pretty complementary backgrounds themselves. My partner Mitchell is a longer-term VC and previously ran 8 or 9 businesses across his career. And then my partner David Magerman is really our technical resource, PhD in computer science from Stanford, and really built his career, is well known in the hedge fund world for being one of the primary people behind building the hugely successful algorithms at Renaissance Technologies.
All right. And what size fund is Differential Ventures?
We're investing out of our Fund 1, which is a $20 million seed stage fund.
Okay. And tell us a bit about how do you define seed, and specifically address the issue that, the seed stage ecosystem has fragmented quite a bit. People doing pre-seed, seed, post-seed, pre-series A, small series A, large series A. There's a whole spectrum of stuff. Even before that, there's friends and family. So what do you like to see? I think the way I phrase it, instead of trying to get into terminology, I try to phrase it as, what do you want to see by way of proof points before you're willing to consider an investment?
Yeah, I mean, we will absolutely invest pre-revenue. Actually, probably more than about half our portfolio today, our first check-in was pre-revenue. So we're looking for generally some sort of MVP, but primarily we're looking for founder market fit and timing of the market, in our opinion anyway, and in our research. So, what we tend to look for is, why is this team, why is this founder uniquely qualified to do what they're doing? Is it a past experience? Is it their academic experience? Is it some unique connection that they have in the industry to be able to get ahead of the competition? And likewise, is it something we can do specifically to help them? Short of that, then traction is definitely helpful to prove that what you're doing is working. But we don't have a specific revenue number or target that we're particularly looking for. So going back on,
is the product done, or that's not a requirement?
Say that again.
You want to see an MVP of the product done?
Ideally, not necessary, but ideally, yeah. We tend to gravitate towards more technical founders. So there's usually some product in place or a product-led approach to the company as a whole. So yeah, I think it's pretty common. Where it's pretty rare for us to take a pitch deck or the back of a napkin and invest at that stage.
And what about geography? Where do you like your founders to be?
So most of our founders are on the East Coast of the U.S. About 50% of our portfolio is somewhere between Boston and Atlanta. About 25% of our portfolio is in Canada, particularly in Toronto. And then about 25% of our portfolio is based over in Israel.
Okay. And double-click down a little bit on what kinds of businesses. You said enterprise, you said data science, AI-oriented stuff. Can you double-click down a bit and add some color to what are you looking to invest in and what have you invested in?
Yeah, sure. So I would break it down into three categories, right? So we're broadly looking at the future of work, but specifically with how data science can change the way businesses actually operate today, which we think, the opportunity is still very large, and most large enterprises in particular are still at the early days of making information actionable. So, we look at the full spectrum of data from, collecting it to interpreting it, and then also, securing it on the back end. And we look at that from, I would say, three layers of technology. So on the back end, we look at infrastructure type platforms. So things like model monitoring, or infrastructure around performance optimization, to make models work more efficiently, more effectively, more cost effectively. And then we go up to a platform level. So how can we enable data scientists and data engineers to better build and enable, facilitate data science throughout an entire organization? And then, thirdly is kind of, the applied AI. So what specific use cases can be deployed within an organization? And generally when we do an applied AI platform, we're looking for something that on the front end has a, let's say, transaction by transaction value proposition to it, either helping a company sell more or cut costs. And at the same time are gathering and collecting a potentially really valuable set of data that we can interpret, analyze, and make use of down the road for analytics or other purposes.
And what is the future of work context to this? You started by saying you look at it from a future of work point of view. I didn't get the connection.
I think the future of work is going to be largely driven by data. That today, I think, enterprises are still at their, are doing a better job of collecting data. I think, most companies are still at kind of the big data stage, but are still really, really new in terms of data analysis and how to apply that throughout the organization in reliable and unbiased ways.
I got it. So your interpretation of future of work as a terminology is a bit different from, the way the future of work soundbite is being interpreted a lot is, this remote work, virtual work, and especially with this COVID-19 situation, everybody is talking about future of work being virtual and all of that. So that's not what you're referring to. You're referring to general workflows in enterprises that are becoming more data-driven and automated.
Well, I would call that where work is happening. I think we're just more interested in how decisions get made.
Understood. That's what I'm saying. What you are referring to as future of work is not the terminology that is floating around extensively at the moment on future of work is vastly about remote work. So anyway, regardless, I understand what you're doing. Now, let's do a couple of examples of things that you have invested in. And in doing so, tell us anecdotally, how did you encounter these companies and what was in those companies that caught your attention enough for you to want to write checks? What you're trying to get at is how you think about investments.
Yeah, so one of our earliest investments was a company here in New York called Offerlist. They do data extraction, validation, and analysis of underwriting documents for alternative lenders, mortgage lenders, financial services, accounts payable, departments like that. So really any paper-intensive, data-intensive business process that's tied to some financial outcome, whether it be a loan, a mortgage, paying a bill, whatever. Met them through an angel investor here in New York that we know pretty well, who had actually written a small check into this company early on. The company had been around for maybe 2 or 3 years at that point and had started out really working with small accounting firms, law firms, really the SMB market, and had just started to get traction in this alternative lending space. And it happened to be a business I knew pretty well from my days at Rage Frameworks. And when I met Sam and Vic, the CEO and COO of the company, I was really blown away by how efficient and effective they were in terms of their costs and back-end operations to scale up what they were doing. Being familiar with the space, their cost to process a transaction was about a third of what mine was just a few years earlier. So I knew they were doing something, A, operationally brilliant, and B, technically really well thought out. And to be honest with you, I spent 2 or 3 months kind of meeting with them repeatedly, talking with them, digging into their processes. I just didn't believe it. I thought they were wrong, or I thought they were not being forthcoming with me. And the more and more I dug into it, it was clear that they were just operationally brilliant. So we got on board.
What were they doing that was brilliant? Can you elaborate?
I can't share all of that, but they've done a couple things around how they structure their team, both on the technology front end of things and in their back end operations in India, to just be really, really efficient and highly accurate. So they can, basically take a bank statement, let's say, from somebody looking to get a loan, and turn that around in the matter of minutes with 99% plus accuracy at a very low cost. So it's really a very tight integration between the technology that they're using and the resources that they use to do any error correcting on the back end.
And this is an enterprise technology selling to banks?
Yeah, banks and alternative lenders. So if you know companies like Lending Club, Funding Circle, Cabbage, groups like that was kind of their initial, where the bulk of their customers were up until pretty recently. So that was it, and it was kind of a funny point. This is what one I would have called more on the late seed side of things. So we finalized our investment in early 2018 as part of a seed round that was still open, but the Series A actually closed within a few days later, led by Bullpen Capital and QED here in the U.S. So for us, we just saw this was a case where the founder didn't necessarily have a technical background, but he was a just natural, really good entrepreneur and figured out how to sell something. And when he brought in, when Sam and Vic got together, is when we really saw the operational efficiency and the technology efficiency start to play out. And you can see about 6 months after Vic joined the company, their margins, turned remarkably profitable. So we knew we kind of had that balance of a sales-oriented CEO that can go out there and find customers and build revenue, and a technical/operations leader that could kind of run the house and make sure that everything's working really smoothly on the back end. And it's been a winning team. They raised their Series B last year.
Well, let's do another one, just to get a flavor of your investments. Yeah,
I'll give another recent one, a company called Naukri, that's based in Toronto. They were introduced to us by one of our other founders, a company we invested in Toronto also. And it was a really interesting story. The team was, Jahanzeb Ansari is the CEO, and his previous startup had failed, and they were looking for jobs. And he was struggling to find a job in the Toronto market, and felt there was a lot of bias in the process, and that he was being filtered out unreasonably so by hiring managers. So he kept tinkering with his name on resumes, and ended up as Jason Ansari, and was hired 2 weeks later. So it's actually an amazing story, sort of a sad story, but also yeah, but really impactful and resonated with me and with our team. So from that, and Jahanzeb and his co-founders, Maz and Faisal, are just really entrepreneurial team of guys. And they started this company, Naukri, which is actually doing sentiment analysis of video interviews. So for a lot of companies, particularly big companies, largely in the consulting or customer-facing world, IBM, for example, is one of their largest customers. A lot of the applicants for certain roles go through a video interview before they ever actually, meet somebody within the company. And Naukri plugs into, a WebEx or a Zoom or other video platforms that companies are using, and really marries together natural language understanding along with some analysis of facial features to not necessarily make a yes or no recommendation to hiring managers, but puts the combination of those, puts the analysis of those two features together into a rating across several different characteristics that hiring managers are generally looking for anyway. It is usually happening at a human level anyway, that we're think we're quite good at, but usually actually really bad at, with different our own biases and so forth. and it's worked. They've taken I would say, simple and a good way approach to doing this that's also compliant with a lot of regulation that's popping up in the market today that's making things harder for some of the competition that's trying to make an actual recommendation as to whether or not you should hire somebody or not. And they've built out some really intelligent models on the back end where my partner David is really coming in and helping them to make sure there is a really diverse base of data sets being used to train the application and monitoring it over time for any bias or drift within the algorithms themselves. So we really like it. And then, with everything going on globally with the pandemic around COVID-19, there aren't a whole lot of in-person interviews right now. So it's been a real spike in demand. And, I think another layer or increase the importance of cost effectiveness and also safety around remote hiring. So for this, there's a combination of just
a good segue into what I was going to ask you is what kind of impact is this COVID discontinuity having on this company? This is the perfect company that should be booming in this environment. What are you seeing? Like what kind of level of lift?
Quite a bit. It's still new. I think as a VC, somebody who's been in technology for quite a while, transitioning to working from home was quite easy for us. We do it all the time, and if we can't adopt to working remotely, then shame on us. Probably not good for us or our investors. Not a good sign for us. So it was easy for us, but a lot of big companies are still struggling to kind of churn through this. And like you said earlier, Sharmana, like how do you actually get people online and going through the pain of logging into VPNs and all of that stuff? So we've seen an awful lot of lift, and the new pipeline has just exploded for them. But we don't know yet. I think it's very much going to be counter-cyclical to a lot of the economy. Yeah, and we're exploring some things, and I think there's some. We just got the jobs reports here in the U.S. and 30 million people have filed for unemployment last month, which is horrifying. So I'm really hoping that we don't have this completely locked in yet, but I'm really hoping Naukri can be just a value-adding partner to help get people back to work in a safe and cost-effective way in the not-too-distant future.
Now, I've been in this industry for a long time, and I've seen a few cycles, like I'm sure you have too. When we have discontinuities, every VC firm goes through a process of considering that discontinuity and developing a thesis around what kinds of companies should be, doing well in this environment. And we just discussed one of your companies that is a perfect example of this, of a company that is counter-cyclical and benefits from this continuity. Do you have a broader thesis on the kinds of companies you're looking for? Because our community is full of entrepreneurs, obviously. So are there types of companies or problems that you would like to solve, that you'd like to find a company to solve?
Yeah, it's a great question. I'm going to be totally transparent with you and say, sort of. So the answer is yes. So I'm hoping in 10 years, Sharmana, we can do this again, and I'm going to tell you, I'm the most brilliant VC on earth, and I planned all this perfectly. The truth of the matter is we closed Fund 1 formally on February 29th, right before this all ended. We had 11 companies in the portfolio already. We had 10 done at that point. Our last two investments that came literally days or weeks before this crisis hit, one was Naukri, and the other is a company out of Israel called Siolo that is basically a one or two click way to access the tools and applications you need at the enterprise level without actually going all the way into the network. So a much simpler and probably more secure version of VPN, and probably even more so than Naukri. These guys have been remarkably counter-cyclical because everybody is struggling to get people online more quickly, more securely, and so forth. So I'm going to tell you that it was brilliant. We knew this was all coming, and this is exactly what we planned for. But that would be a lie. But the truth is I think we do have to plan on having, as you said earlier, more remote work. How do we get people online and connected much more efficiently and effectively and securely? Because times like these tend to also breed a lot of other cyber attacks and hacks that put everything at risk. So I would say getting people online safely, securely is still very interesting for us. We would absolutely make other investments in that space, next to Siolo or Anakri. I think that this is the time actually where, and I'll give one example in kind of the U.S. and some of the Western world, and then one more developing example. In the Western world, I think this is where, a lot of the traditional types of businesses, enterprises that have really been slow to adopt technology, even just fundamental things like, DocuSign or easier to use VPN solutions.
Absolutely. I have all those stocks, DocuSign, Okta, and RingCentral, and they're all booming.
Yeah, exactly. I think a lot of these just fundamental, core platforms are going to really be adopted in places like government, financial services, and the healthcare system because it's necessary now. I think for the first time we'll really get over the hump. In some of the more developing worlds, I'm actually really interested. I'm not sure if I can invest in this space because I've worked there before and it's grueling. But in the energy world, in a lot of sustainability type of platforms, and just I would say modernizing and hardening infrastructure. I still think places like India and Africa, where I've spent some time in India at least, have amazing opportunities to leapfrog a lot of the rest of the world in some of these ways. Lots of hurdles, of course. Probably takes a bigger fund than ours to really support that. But we're interested in interesting opportunities there.
So one of the areas that I think is going to be a big area after this, it was already big, but I think it's going to become much bigger, is the industrial AI and machine learning as the supply chains try to become more resilient and self-sufficient. So there's a lot of the factories that supply the U.S. supply chain are going to try to come onshore. And those are not going to be human-powered factories. They're going to be largely automated factories. So there's got to be a huge boom in industrial automation.
Yeah, I agree with you. There's there's a few different ways this can really play out. I think barring much change at the political level in the current administration, we're probably prone to going to more of an isolationist type of future for the next several years, which I think would bring a lot of manufacturing back into the U.S. and back into places like Germany. Not necessarily true. I actually, I think with a change in administration and maybe even some other factors, I still see globalization having a chance. I can see, places like China really undercutting their own prices to make sure that they retain their market share in manufacturing, for example. But either way, technology is going to be the leader behind it. Especially here in the U.S., it's kind of, it's a whole confluence of factors out there that actually really, I think, as much as we invest in machine learning and data science and AI as a fund, there are some social things that really scare me around, the readiness of this technology now and replacing a lot of jobs that may not come back. Because in addition to technology, the crisis, the health concerns, there's also significant tax benefits for U.S. corporations since late 2017. that were really positioned as investing in manufacturing and shops and factories, but it, is really promoting more technology that will, create some new jobs, but also displace a lot of people. So one thing I'm always interested in, it's hard from a technology perspective, but even just as a human being and as a philanthropist to the extent I can be, is just how do we, retrain people and find new homes for them in the workplace is always, really compelling.
Yeah, I think there's a huge question mark around the 30 million people as of today. The last reports that are out of jobs in the U.S. and globally, it's a much bigger number. What percentage of these are going to come back? What percentage of these are going to become the victims of this accelerated automation trend, which was already in full swing? The automation trend was already in full swing, and this is just going to accelerate that trend. That part really is very worrisome and cumbersome. I wrote a series, if you're interested in this topic, called Man and Superman. It's on our blog. So it's really going through the whole philosophical and economic, etc., of this this trend, essentially. So, I want to switch to the entrepreneur pitches, and there seems to be already a lot of questions in the public chat. We'll get to your questions, folks. Do not lose patience, but we have to go through the scheduled entrepreneur pitches. Nick, you're staying for the pitches, yeah?
Yes.
All right, so let us set a bit of expectations here. This is a safe working session. This is not Shark Tank. We're not trying to increase our TV ratings and be mean to you and make audiences laugh. That's not the purpose of this session. It's a real strategy session where we only care about helping you figure out how to remove your roadblocks and discuss your strategy. You can disagree with my feedback. You can disagree with Nick's feedback. Doesn't matter. It's your venture. We are going to give you feedback based on our experience. You need to process that feedback. What I would say is remain open to the feedback, even if you disagree with it, and try to process it and figure out how to handle those pushbacks that you would probably be getting here. Remember one thing, not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. So just because you just spent half an hour on investor discussion doesn't mean that that is your immediate next step. It could very well be that your business is not a venture capital style business, and that's also fine. We work with a lot of entrepreneurs who don't raise money and build their companies organically. We are going to start with Geetha Ramaswamy, who obviously can sing, from Chicago, USA. Please come, Geetha, and unmute your line and tell us what you're working on.
Ramana, thank you for the opportunity to present here. I realized that this is not, okay, this is the updated slide deck. Thank you so much. First of all, nice to meet you. And Nick, very excited to meet you and hear some of your insights as well. I'm Geetha. I'm based out of Chicago in the US, and I am the CTO of Menerva Software. I'm here to explain how to run your business on autopilot using your data. Next slide, please. To begin with, let me ask you this. How many applications do you have on your phone to manage your personal finances? For instance, between your bank and your loans, you probably have a few, and you have to manually look at all of them and spend time to understand a full picture of your financial health. Next slide, please. Interestingly, businesses face a similar problem. They employ a cocktail of applications, need specially trained admins to set them up and execute the workflows that serve their customers. Next slide, please. The entire process is expensive, labor-intensive, and cannot scale. As a result, they rely more on guesswork and less on data to impact their key decisions. So how do we solve this? We propose a one-stop application that organizes all the data and automates your manual, time-consuming processes, leveraging artificial intelligence. Next slide, please. So in other words, similar to what you see here, we put your data to work with a custom analytics SaaS solution that can increase your productivity, reduce costs, so you make actionable decisions without any guesswork. Next slide, please. So here's how we do this. We believe in an incremental product design using our boilerplate SaaS platform components. This involves clearly written specs, weekly development milestones, no technical R&D, applications that can scale, fixed bit costs, and small member teams. This allows us to always release products on time, within scope, and within budget. Next slide, please.
Sorry, what has this got to do with the business model?
So the business model is basically, how do we execute, and what, when a particular business comes to us, and
so you take services contracts. You take your business model is basically services. Is that what you're saying?
Right now, yes, it is, and I'm covering that later also, Shramana. So we are 20% services now, and we are looking to increase 20 to 80%, 20% services and 80% products, and we are looking to increase our contribution to products more and more, as we grow. Okay. So let me say if it's okay. So
you want to be the previous slide? I'm sorry, I don't know which slide you want to be on.
Yeah, this slide. So what I was getting to is, based on our business model, the business value our customers enjoy is that they have a lower total cost of ownership because they don't have to spend thousands of dollars to sustain a product development team. And they also don't have to be technical or worry about supporting technologies and ongoing maintenance of the product. And this allows them to focus on their product roadmap. So if we go to the next slide. The incentive is, why us? Why does product development even fail? We feel that the reality is that many fail because companies are taken for a ride with technical R&D and poor execution. And I've been a product manager in my past and seen due dates missed, thousands of dollars wasted, and months of effort go down the drain. And 4 years ago, I decided I should make a change. So,
okay, so Geetha, I'm going to move a little bit faster, and because we have 4 pitches to listen to, and I'm going to start giving a little bit of feedback and bring Nick into that process shortly. You are making the case of custom software development to build a composite app on top of various different cloud services, correct?
Not exactly different cloud services, but on cloud platforms, yes.
But you showed logos essentially HubSpot and Salesforce, and I imagine that you're trying to sit on top of HubSpot and Salesforce and so on and so forth and build a composite app. Isn't that what you're saying?
Yes, and so the first thing would be to understand what are the different workflows that a customer has. So in our case, our clients are all, business customers, and what they end up doing is they have a host of applications that they use, and oftentimes they realize that they spend, they spend a lot of money, but they end up using only 5% of the functionality. So in some cases, it's basically ascertaining whether that particular application is even needed, for their workflow to function. And secondly, the aspect of the data not all being in a common spot, and the challenges with having to, collaborate with all these applications and also create a single source of truth from all of this data, and then figure out, what the insights are that can drive their business on a day-to-day basis rather than waiting for months.
So you've done 5 such projects?
Yes.
And what area of workflow have you done this in? Is it marketing? Is it sales? Is it finance? Where have you had most of your projects?
In healthcare and in influencer marketing.
Healthcare and marketing, okay. Yeah. And what size companies have you worked with? Is it SMBs, mid-sized companies, large enterprises? Where have you been working?
Our sweet spot is with small to medium businesses who do not have a CTO or a strong tech leader and a team. And our biggest value proposition is the fact that we can execute and yeah.
How much do you get paid in these products? How much have you got projects? How much have you gotten paid?
Our average release lasts around 3 to 4 weeks, and each release is anywhere between 20 to 30K US dollars.
Okay. All right. So you've made about 100K based on these 5 products?
Around 200K.
200K. Okay. All right. So, the first thing that comes to my mind is that if you want to do a composite application on top of something, narrowing your focus down is important, because you started off by saying that you want to sit on top of all applications. I would hesitate to go with that kind of a positioning. If you want to find, eventually, if you want to productize this, I like to hear the fact that you're doing SMB, healthcare, marketing apps. So if you take those 3 and kind of start seeing repeat patterns, there is a chance that you might be able to find a composite app on top of that sits on and pulls together the commonly used marketing cloud marketing app platforms or apps, whatever services you call it, into something that is productizable. And I'm actually perfectly fine with this bootstrapping with a service methodology. We use this all the time. In 1Mby1M, we use bootstrapping using services to build a product constantly. This is a proven methodology, and if you've been following 1Mby1M, you probably know that I write about this all the time. So that's fine, but I think this very generic positioning of offering services, even that process, you need to narrow down and focus on something much more precise. Nick, what do you think?
Yeah, I tend to agree. I mean, I think you just from an investor, if I just step back and be an investor for a moment, if this was a pitch session, it's probably one where I would say, look, this is something that we might be a customer for. And I also might say that you can probably build a really good business around this. I'm not quite sure if this would make sense from a VC fund perspective, just given how hard it is to make the math work there. But obviously, you're doing something right here. And I think with some focus, could be a really good business.
So,
what is it you're trying to productize? Is it
right? So if you go to slide 12, that's what I was getting to. So the last 3 years, right, we were trying to ensure that our execution, that we can execute. And the one prior to that, Shramana, I'm sorry, slide 12, if you don't mind. Yeah, the one prior to this. This is 30. Yep. So, like I said, our breakdown currently is between services and products. And yes, we are providing services by creating products for our customers. The thing is, we wanted to learn about and ensure that our execution is nailed, our strategy. But we have also, at the heart of this is a product that we are developing. It's called Trace. It allows banks and financial institutions to manage portfolios and alerts them about delinquencies way ahead of time, minimizing their losses. And as we know, this is a time where this is very relevant for banks. So we've just launched our MVP for this, and that's where we are going to pivot. So till now, yes, we have done services, and we will continue to do that because the services aspect of our business is what is funding all of these internal products, because we are bootstrapped and we're continuing to do that. Yep.
The one tip I will give you is if you're trying to do bootstrapping and services, bootstrapping using services, you should focus your services in the domain in which you're trying to build the product. So instead of doing healthcare projects, you should go do bank projects instead of, just to get closer to your customers and around your value proposition. Try to get closer to the value proposition, do services around the value proposition so that you develop relationships with the right people and get domain knowledge around the right problems. So we'll leave it at that because I need to move on. We can certainly, if you stick around, we can certainly continue the conversation later. But I get a sense of what you're doing. This is not a fundable situation. So you need to understand what is fundable and accordingly make your choices. So, here. The next presentation, thank you, Geetha. The next presentation is Ssemakula Peter Luyima. Could you please unmute your line, Ssemakula? There we go. Go ahead. Go ahead, please. Your line is still muted. You need to unmute your line. Go ahead.
Can you hear me?
Now I can.
Okay. Thank you very much. I'm the CEO of a new electric vehicle entrant based in Las Vegas, and currently in the concept phases. And can you go on the second slide? Yeah, I'll just talk pretty fast.
You don't have that much time. You have to pick something very quickly to tell us what you're doing, and we can talk about some of your questions. We have barely 10 minutes.
Now we're involved in setting up a new electric vehicle project in Nevada with a network of a team in Germany as an independent design team, and also a vehicle contract manufacturer in Finland. Our product is mainly autonomous personal public vehicle approach, which we are introducing a totally new ecosystem driven by consumers. It will be the first ecosystem whereby consumers will co-own together with the company. And what this means, we have Tesla and the rest who have different vehicle subscription services, but our subscription services linked with the stock exchange allows a self-financing method. And as we speak currently, we are starting with a 1 million convertible loan, and that mainly is to set up an exhibit concept car in Las Vegas, which will be in 2021. And then also, secondly, making sure that we're able to address a consumer ecosystem driven system. So those are the two things that we really want to make sure. And looking at the scale of opportunity, we are more interested in the mass mobility market, which is now $10 trillion in gross revenue, according to Axe Research. Can go to another system. So
I don't understand what you do. I'm sorry, I don't understand what you do.
There are two things. We are setting up a new electric vehicle in Las Vegas, and a new consumer ecosystem driven system. What this means is that we are trying to get away from the current business model, the purchase model. We want to give more purchasing power and provable ownership to the consumer, and we're utilizing a new stock exchange in Seychelles and also a digital asset enabled by a public blockchain network. So what that means is that for the first time, you can be able to own a car with a very few initial shared capital contribution of, let's say, 2,500, and then a self-financing method that is set up on a stock exchange that provides a winning solution both to the consumer and also low-cost financing to the company. And that
okay, I still don't understand what you do. And that's very bad news, because you have already talked for 5 minutes, and I'm a reasonably intelligent person. I still don't understand what you do. It's very bad news. What do you think, Nick?
Yeah,
can you repeat the question?
You're trying to do a lot. Why? It's a pretty complex funding strategy. But also, why bring a whole new electric vehicle to market when there's so many out already? And you're talking about hundreds of millions, if not billions of dollars to do so. So why are you trying to tackle that part of it?
No, or maybe just to put it very clearly, we are a new electric vehicle project, and
why?
coming with our own.
That's the question that we are trying to first answer is why is there the need for another new electric vehicle company, which is an extremely capital intensive business? Why do you want to do that?
Yeah, because first of all, we think that we have a good solution for adoption of electric vehicles globally, because we have only few units that are being provided, and then also globally we think that the best thing is looking at the high-end market, which is only currently focused in the US and around the world.
Why do you think you can raise the level of capital required to do a project like this? This is an extremely capital-intensive project. Why do you think that you have the wherewithal to raise that level of money? What's the background of the team?
Okay, there are two things that we intend to accomplish here. The first thing is the kind of the financing arrangement that we're coming up with is more rooted with the consumers. There's a little amount that the consumers are able to contribute, and then we use a self-financing method using ATPs, exchange traded products, on an exchange to be able to boost and make sure that they can have more ownership, and then instead of having the monthly payments that is what I like in other projects, they can be able to. You haven't
answered my question. You're trying to use some sort of a cumbersome method to get consumers to fund this project, but you haven't answered my question. Why should, if I'm a consumer considering this investment, why would I invest in this company? What's behind this company to give me that guarantee that this is a good investment?
Yeah, because the company provides an ecosystem that is sustainable, and it provides.
There is no evidence that the company can do anything. Who is the company? What is the team? Is there any relevant experience? Is there any domain expertise in here? There's not a word so far in you 15 slides. There's not a word about who are the people. You have some business model innovation that you're trying to.
Go to the second slide.
Yeah.
Yeah. Just note the third one. Yeah. We have Studio Cobos, an embedded design studio. We have Beyond HMI, and then we also have vehicle contract manufacturer. That's the development in automotive in Finland.
But that's an outsourcing company. That's a studio. That's a design studio. Who is the entrepreneur? Who are the entrepreneurs who are driving a project like this? And do you have any domain knowledge in bringing an electric vehicle company to market?
Yeah, myself and a team of around 5 executive advisors.
Yourself, I understand, but who are you? We don't know you. So here's my quick tip on how to pitch this. First and foremost, the first thing you have to pitch is what is the domain knowledge of the team to even have the right to do something like this. Otherwise, no one's going to take you seriously. No investor is going to take you seriously. And this, all this complicated business model stuff, financing model that you're trying to do is not going to be doable because no one's going to take you seriously. So first thing I would say, you fix the pitch to address the first question is why you? Who are you? Why you? Why do you have the credibility to take on something like this? So I'll stop at that and let you mull over that and work on that as your first next step. Okay?
Sure.
Emeke Anderson from Nigeria, you are next.
All right. Thank you, Samara. Thanks for that info. My name is Emeke Anderson. I'm from Nigeria, Lagos. I'm currently the senior partner for Crest Toys. Crest Toys in Nigeria currently is a toy company that distributes and retail top brands across the world. Basically, we are doing top brands for Hasbro and also for Mattel. This project came across during the time where we're trying to solve some crisis in Nigeria in terms of how businesses will upskill. So the problem here is, one of the problems we discover is that most Nigerian businesses, basically SM, has this problem of access to fund, and that's one of the problems that we saw. Next, okay, thank you. Now, this is the problem we saw, and we looked at it critically, and we said, let's look at how we're going to do this. Now, if you look at the e-commerce structure in the country, you discover that
your line is cutting away. We can't hear you.
That helps to collect money.
Emeke, your line is.
Sorry about that. Can you hear me now?
Yeah.
Go ahead. Okay, so PayTac is one of the foremost companies in Nigeria that helps those collection on behalf of customers. Next slide, please. So I asked, who is an entrepreneur? Entrepreneur is someone who tries to create a unique product and services to solve problems and bring it to the market in hope to make profit at the same time. So we interviewed lots of entrepreneurs, and we realized that from our research, we have 37 million MSME in Nigeria, according to SMIDAN. And in these 37 million MSMEs, we have 17 million plus that are registered in the country. And this constitutes about 48% of national GDP in the country, Nigeria, and provide 84% employment and constitute 90% of businesses in Nigeria. Next slide. After interviewing
Emeke, we're having some difficulty hearing you. I'm going to try to understand what you're doing. Just going back to this slide, it looks like there are 17 million unregistered MSMEs in Nigeria, and you're trying to create more formal business processes for this category of entrepreneurs that constitutes 48% of national GDP. Is that a correct summary of what you're trying to say here? We can't read these slides. You can't put that much text on slides, guys. It's impossible to use these slides.
Very correct.
Yeah, okay. So what is it? They don't have bank accounts?
Majority of them use a registered company, which gives them the access to create a business account. So they use personal accounts to run their business, which costs a lot of when it comes to reconciliation of how they transact in their businesses. They can't give account of it. So what we are trying to bring is a solution that helps them to track their expense and track how they collect their money, and at the same time help them to save in order to increase their profit.
So instead of operating as people and doing a business out of a personal account, you're trying to get them to set up a business account and run their activities as a business. That's what you're saying, yes?
Very, very correct. Very correct.
So here we go. What is the product that you can do to make this happen? Does that mean that you set up a bank account through your product and a little bit of an accounting solution? What is the product? What's in this product that you want to sell them?
Okay, we're creating which is
I'm on Skype.
We are creating an app that will help them to monitor their expenses, and at the same time, that app will be connected to a wallet that will help them monitor their expense and even pay for their purchases and get it tracked so that they will know what is coming in and what is going out. So in that case, when we see that transaction, the app is going to be connected into an API that helps to do a credit score for them, because we're going to be giving them loans as well. Because most of the money that comes in and go out, a portion of it will be saved for us to do a credit score on their behalf and know how much they are really qualified to take as loan. So that's the app, the solution we're trying to build. We're trying to build an easy auto saving application that has accessible, low-interest loan plus a business record.
So your primary goal with the 17 million businesses is to create certain business processes so that these businesses become credit-worthy.
Exactly.
Got it. Got it. Okay. So what about business models? What are you thinking of charging these people? It's actually a good idea.
Thank you very much. Our focus is going to be on the interest rate that we're going to take in terms of giving them loan, and at the same time, they are going to be saving some part of the money that they collected over time with us. So
you
we
want
also
to provide
use
the
that
loan
money as well.
You want to be a bank?
Yes, we give them loan. Exactly, a mini bank for them, because one of the problem we discovered is that majority of them cannot scale up their business because of access to funds. Currently, what we have, the interest rate is high. So if you could do something that helps them, this money that they collect online from their customers that they collect online, they could save a portion of it. For instance, if you are collecting $100 from a transaction and you save $5 over a period of time, say 6 months, you've been able to save close to like $2,000. The system will be able to give you a credit rating, and at the same time, we could say, okay, after 6 months, you've successfully saved $2,000. We want to give you 50% of what you have saved plus 50% because you've proved over time that you can generate funds and you can turn around revenue. So we know that, so we can start giving out loan at a low interest rate. So that's what we're going to do.
So here comes a complexity in this. The whole lending, fintech, micro-lending world operates on high interest rates. I'm sure you know this because you're trying to get into this business.
Very well.
And it's usually an arbitrage. You borrow money with a low interest, you borrow a significant amount of money with a low interest rate, and you parcel out that money at a high interest rate. That's the business model of these microfinance banks. So now you're coming in and saying that you don't want to follow that business model. You want to lend them money at a low interest rate. Your business model is going to run into trouble if that is your assumption. How do you go about, addressing this issue?
Okay, thank you very much. First instance, once you sign up, you are not entitled to take loan in the first 6 months.
That's right.
So it means you're going to do saving for the first 6 months, after which we could now quantify what you have saved and say, okay, we are giving you 50% of what you've saved. So in doing that, we're also keeping and mopping up funds from these merchants or MSME, and also use that same money to redistribute across the ecosystem. So it's like taking from A, saving from ABC, part of ABC, we give CDB. You understand? So that's the model we want to use to operate. So more or less like having a cheap access to fund, and also giving it out at a low interest rate. Okay.
I understand what you're doing. Go ahead, Nick. Would you like to comment on Emeke's business?
Yeah, this is definitely a good idea. There's I would say a bunch of companies like this in the market now. So there's clearly a need. The challenges that you're going to face are really around what you're talking about here. So cash flow is an issue. Like you're talking about operating like a bank. You need to have cash reserves. That can become regulated. That can become very expensive. You don't really know what your default rate is going to be, but it's usually quite high, which also leads to the high interest rates. And usually, just saving and lending from savings is a pretty tough way to get going. You have to get to a really high volume of people with enough money in their, in your account, trusting you as opposed to other banks with their money. That it's going to be pretty complicated. So usually you have to either lend off your balance sheet, which is equity capital for investors, or you have to go out and find a line of credit from banks. So it's, yes, huge need, just more complications here I think you would need to address.
Do you have any background in banking or finance, Emeke?
I don't have background in financing, but I have my partner has a deep background in finance and banking as well.
So this is something that you're going to need to think through. You can't really work off of the deposits as the only capital. You're going to have to figure out how to capitalize, how to get a banking license. I don't know what are the banking license regulations in Nigeria. Those are the things that you need to investigate. But I think the main assumption that I think we are contesting in your business is that you can do this entirely off deposits. I don't think you can do that. You have to raise money. There has to be equity capital or debt capital. If it's debt capital, then it's basically, you need to do the arbitrage, and you can't charge low interest. You've got to do an arbitrage on the debt capital. And it's not easy to raise debt with no balance sheet, really. So this is a very tricky business that you want to get into. The problem, it's a big idea, it's a good idea. The problem is there are other companies doing it, but can you bring in all the pieces that are required to get something like this off the ground is a question that you have to look at much more carefully, addressing these capitalization questions. Okay?
Okay, thank you very much.
You're very welcome. Our last presenter is Sachin Sharma from Indore, India. Sachin, tell us about Pandit Jee.
Hello, ma'am. Hello.
Hello. Go ahead.
Thank you so much for having me here, ma'am. And Nick, a very warm welcome to you. And thank you so much for giving your valuable time. Well, before talking about my startup, Pandit Jee, I would like to tell you about the problem, why this startup is needed. Because if there is no problem, there is no business. So let me tell you first about the problem. India. India is a land of culture, a land of customs, a land of religions, and a land of peoples. We Indians do prayers on daily basis, sometimes twice in a day, thrice in a day, sometimes weekly. It depends on our religious belief. So what is the problem is, there are a lot of God and there are a lot of goddess in Indian cultures, and there are a lot of religions in Hindu. Like there are Jains, there are Brahmins, there are a lot of sub-religions in Hindu, and there are a lot of prayers. And to keep all these prayers in one bookshelf, it is very difficult. So what my app is all about, my app is all about a Pandit Jee app. Pandit Jee for Nick. Pandit Jee is a professional person who takes money and delivers you all these speeches and all these mantras. Okay. So Pandit Jee app will consist of all the prayers, all the holy books, all Vedas, all mantras, all various kind of online temples and views. First slide, please. So this is all about me, what I'm doing. I have done Bachelor of Engineering, I have done MBA and all. Second slide. Yeah, this is all about my startup model. This is basically a subscription model. It will be a customer funded model because nowadays, as you can see, there are hundreds of millions of users of Facebook and WhatsApp in India. And if they can download WhatsApp and download Facebook, that means they are using an Android phone. And this app will be downloaded from any Play Store, and it will cost a few rupees to them because this app will be a read-only app, and it will not cost as much as to me. Even a very small freelancer can make this app. Second, customer segment and value proposition. First, let me tell about you the customer segment. All Indians are my customer segments in a major way. And when we talk about value proposition, I already explained you why it is a need of this app, because it is very difficult for us to gather all these books, and all these books cannot be updated so easily.
Sachin?
And
Sachin,
yes?
Let me stop you for a moment. As you know, I'm Indian, right? And Nick has
Yes.
also lived and worked in India, so we have a decent understanding of Indian culture. So I'm going to try to help you, again, pitch this better, because all Indians are not your customers. You are trying to help people who want to do religious rituals with the right mantras and the right ritual the prescribed ritual practices, correct?
Yes, ma'am, exactly.
Right. So you need people who actually celebrate those rituals, those religious rituals, with those kinds of customs and processes, and with a priest normally, right? These rituals usually have a priest. As you said, this priest is paid money who comes to the house and conducts this practice, or
Yes, ma'am. Yes, ma'am.
Roughly speaking. So now you want to take that priest out of the system, is that what you're saying? And you want to give these mantras and the ritual structure to the householders, is that what you're saying?
No, I don't want to take priest out of the system. I just want to tell you that there are so many rituals, and there are so many prayers which are being done on a daily basis, like Hanuman prayers. You must know about Lakshmi prayers, and there are so many prayers. And a priest cannot go to every house for such kind of prayers. And if we can have all these prayers in one app, we can teach our children.
Oh, I see. So this is not tied to the major festivals or major puja.
Yeah, it will contain.
This is a daily, day-to-day ritual.
Day-to-day rituals, and it will also contain every prayers about the major festivals like Holi, Diwali. You know about Raksha Bandhan. There are a lot of kathas. There are a lot of stories to be told on these festivals, like the story of Ram for Dashera.
Okay.
It will contain all stories. It will contain every kind of thing. These things I will update when I will just get onto the app. I will update it. There are a lot of other things also added. Next slide, please. I will tell you in the segmentation analysis. All Indians are not my customers. Exactly. I have just figured out who are my customers. I will figure out customers on the basis of demographic, on the basis of their behavior, geographic, and my old customers. First, let me talk to you about the main customer segment, women. Women are my first target, because day-to-day practice, all men are very busy. Every Indian is doing a lot of work. It's a very hectic schedule for Indians, especially for men. And women, especially in remote areas, in villages, in towns, in small cities, not in metros, are my first primary customers. Because what an Indian woman think? When a child is born into his family, he just want to tell him about the religious belief. He just want to explain him about the prayer. So women, these kind of women are my first customers. Then I will go to the temples. I will ask about the peoples who are main in this kind of scenario. Then they will be my second customers. Now let's talk about target customer market. Next slide, please. One slide before. Target customer definition. This slide will tell you that how I am going to target these customers. How am I going to get these customers? So women, as you know, there are a lot of social gatherings in India. On daily basis, there are a lot of small social activities, social function in India, where a very small function can unite hundreds of women. So at those times, we can tell them about this app, and we can go to a temple, we can go to saints, because you know about gurus and saints in India. If a saint is doing Bhagavad Gita or some holy prayer, there are a lot of thousands and thousands of people will listen to him. And if we tell him about the importance of this app, that you can read all these books and you can read all these things in the app on your daily basis, you can learn mantras, you can learn all these things.
Sachin, we need to go quicker.
Yes,
one thing that you need to take into account as you're thinking through all this is in the next 2 years, there will be no large gatherings, because coronavirus is going to be around for at least 2 years until there's the popular 7 billion, 8 billion population can be vaccinated. So there will be none of this, assumptions that you're making. So my suggestion to you is, what can you do short term, and how can you acquire customers online, and customers who are willing to pay? I don't want you to come up with a business plan that has, we're going to do this for free for lots of people, and then figure out somewhere down the road how to monetize it. I would like you to figure out what customers are willing to pay for, and that could be a very small, well-defined segment of customers that are willing to pay for this, and you need to understand what is it that they're looking for that they're willing to pay for. And that's something that I don't see in what you've presented so far. I don't see that understanding. of what is it that you can get people to pay for?
Customer will pay for all these things. I'll take 1 minute in explaining this. Customer will pay for their religious prayers in one place, all the holy books in one place, online temple view. This is going to boom in India in a few days. Online temple views, all Vedas and mantras in one place. And after that, I will also add professional persons hiring from that, because it is very difficult to find professionals when we are going for temples and when we are going for mantras in our home and any kind of religious festival. It is very difficult to find Pandit Jees, these professional people. So I'm going to locate those people also via this app.
You're assuming all these things. You better start before. This is not going to be easy to build all this content, because this content you're going to have to, if you're taking other people's content, then you're going to have to license that content. If you're, how are you going to get all this content? That's something you need, a content development strategy, and you need to test whether people are willing to pay for this. The problem with the internet and the problem with apps, especially the problem with India, is nobody wants to pay for anything. So your assumption that people will want to pay for this is one that I contest until you validate and prove me wrong. And I'm not saying one way or the other, I don't care. My opinion doesn't matter. What matters is, are your customers willing to sign up with a payment in this? That's something that you're assuming that I don't necessarily think you can assume. Nick, what do you think?
Yeah, no, I think the good thing here, if you can sort out kind of the content acquisition strategy and the licensing and all those logistical issues, is that this is a pretty easy and inexpensive thing to test. Exactly what Sharma is saying, of like, you can spend a little bit of money on a Facebook ad or Google ad, something like that, and see if this works.
Exactly.
Yeah, if people are looking for a Pandit Jee, let's say on Google, people are looking for a Pandit Jee, you are a perfect app to position there against those Google ads. And I suspect a Pandit Jee and related keywords are probably not that expensive. So go test it out a little bit and, get a bunch of people who are interested in something like this and talk to them and figure out what is it that you can actually sell them, not just give them for free. You have to figure out something that people are willing to pay for. Okay?
Yes, ma'am. Yes, ma'am. Thank you so much.
All right. You're very welcome. Folks, if you like what we are doing here, and I'm going to say that everything we do is completely candid strategy feedback. As you can see, we're not pussyfooting around and giving you a pat in the back and telling you, oh, you're doing great, this is fantastic. That's not the purpose of this session or this forum. The purpose of this forum is to understand what you need to do, what are the next steps, how can you position, how can you package, how can you monetize. That's what can you finance, what can you not finance. If you're assuming that you can finance something that is actually not financeable, you need to know about that and not make that assumption. So that's the spirit of this community. So if you like that spirit, refer 1Mby1M to other entrepreneurs in your network, in your friends and family. Everything resource-wise, I'll take a minute to explain to you how to use the program. 1Mby1M.com is your starting point. You'll find a terrific free blog that just by reading you will learn a lot. The Entrepreneur Journeys book series. So the blog has the Entrepreneur Journeys blog series. These are interview-based case studies. There's over 1,000 of those. And then there's a book series of 12 books based on those case studies as well that you can use to start your learning, also case study based. These roundtables happen every week. Over 150,000 people have attended. You can come here as many times as you want to and keep, listening and learning from these, listening to the recordings. Our full acceleration program is 1Mby1M Premium. And there we offer you extensive methodology, full guidance. We have private sessions for members only, sessions of these roundtables constantly that you can come and get repeated guidance. There is a digital curriculum that has captured the methodology that we teach, and that's enhanced every month. That curriculum is available for you to access from anywhere in the world at any point. And it's a 100% digital curriculum taught in case studies and video lectures and video interviews. We do help you with business development. We have a terrific network. And if you're a part of the premium program, we do make introductions to whomever in our network that may be helpful to you. And we also help you with financing, but you have to get to that point. You have to be quote unquote fundable. We will help you in that process, but some businesses are just not fundable. So we can't guarantee you that just by joining the program, we can turn you into a financeable business. So if you're not a fundable business, then we will guide you on how to build that business as a bootstrap business. And if you're doing something that doesn't validate, we will also help you figure out that, no, this is not something that you should be doing for the next 2, 3, 5 years of your life. And that is also helpful because a lot of entrepreneurs end up wasting huge amounts of time and years of their life just pursuing a bad idea. I suggest you go to the self-assessment on the 1M1M website. Here's a series of questions, a free questionnaire, free tool that you will need to, these are questions that you will need to answer. Any investor that you face is going to ask you these questions. We prefer that you do your homework and learn how to answer these questions before you face any investor. If you get stuck, if you find methodology gaps, go do the curriculum. 1M1M Basic is curriculum only. You can do it on your own. It's $99 a month, and just learn the methodology and try to understand how to put one foot before the other and not make the wrong assumptions. Like our first presenter today, Geetha, was talking about an assumption that she wants to raise money right away. This is not a fundable scenario. So that is a false assumption that needs to be removed from her strategy and a different strategy put in place so that she can at some point perhaps become fundable or not, if you don't know. But that's, there is a lot of methodology that you need to learn as a first-time entrepreneur. It's a very steep learning curve. Now go into the website and dig around what to expect from premium, what to expect from basic. Try to understand if this program is for you or not. The curriculum is described in full detail. Now, this program is not for everybody. If you're not able to do self-learning and using the tools and stuff that we're going to give you to learn from, if you cannot motivate yourself to do that learning on your own, we won't be able to help you because we don't do a lot of spoon feeding in this program. And I don't think entrepreneurs do very well if they're not capable of self-learning. Our methodology is bootstrap first, raise money later. Most of the time, that is how the investors would engage with you. You have to get some distance before investors would engage with you. So you have to start in a bootstrap mode. So we emphasize bootstrapping a lot. So that's it. There are free roundtables every week in May. Go ahead and register if you want to pitch, if you want to discuss. We also do LinkedIn Live, Facebook Live, and Twitter Live, an online rendezvous on Tuesday mornings. And every week in May, we have that as well, 8 a.m. Pacific time. So now we are ready for further Q&A. We have 7 minutes of Q&A. Please go ahead and start typing your questions in the public chat, and I will take those questions and try to, either Nick or I or both will answer them. Joe Banerjee, how should a startup approach a potential VC or an investor? What is the proper step in approaching the organization? Joe, mostly you're going to need to get introduced. There are few investors who would take cold approaches, but most of the time you need a warm introduction by somebody who knows that investor. Nick, what is your policy? Do you take cold calls, or do you mostly work through your referral network?
No, you're spot on. A referral is definitely the best way. That said, it's not easy for everyone. So people just don't have those connections or that access. So I would say, if you are going to reach out cold. I would just put a really, thoughtful, personalized email together, because LinkedIn messages are extremely hard. There's not a good way for us to, LinkedIn inbox doesn't have a good system for managing messages, whereas email does, right? So just systematically easier. Secondly is I can't tell you how much junk and spam, and I mean, I get literally hundreds of messages a day. So best to go email, very, very thoughtful and direct.
Yeah. Joe, you should go to the 1Mby1M website, and we have actually a whole section on investor introductions. Go look at that, and after you go through that, you can always ask questions. I will introduce you to Irina Patterson in a moment. She can answer more of your questions on that topic. There is a question. Chitra Singh is asking, micro-lending company for this could be feasible. That's, I think, in relation to the Nigeria business that we were talking about, okay? Abhijit Sengupta, what is your opinion on crowdsourcing Indian context? What are the types of startups that will be able to leverage post-COVID revised market scenarios? Well, crowdsourcing in what context? Indian context is the geography. But there is also context involved, right? You crowdsource what? Crowdsource. You need to elaborate on the question. I don't think this question is addressable as a blanket, broad question. And your second question, what are the types of startups that would be able to leverage post-COVID? As you can see, and in the discussion that Nick and I were having earlier on, we were talking about some of that, right? One of the behavior changes that is happening, which is very relevant, is people are trying to do more things online. They're trying to shop online. They're trying to work online, virtually as much as possible. So all of those have implications of shopping online, meaning you need e-commerce to basically be a much bigger presence in your lives, and you're not going to stores as much. And when you're working online, there's all kinds of things. You need collaboration tools, you need cybersecurity tools so that you're not exposing yourself to an enormous amount of, violation and vulnerability, cybersecurity vulnerability. You need to perhaps, we looked at a use case of interviewing, hiring online through online interviews. There's all kinds of workflows that come up if you are largely working from home. So those are all, entrepreneurial opportunities. You have to figure out what already exists and what is open. So in any case, any entrepreneur anywhere in the world, if you're trying to find an idea to latch onto, you need to figure out what is the competitive landscape and is there a gap in that market. If there is no gap, you have no case for getting into that market or that business. And that's the pushback that we gave to the electric vehicle company. What is the gap? Why is this entrepreneur, why does it make sense for this entrepreneur to spend the next 5-7 years of his life and the lives of various people around him on this business? Why? So that's a litmus test that all ideas should be taken through. Okay, here we go. Geo Salvo, once a startup hits $1 million, what does a typical VC deal look like now from a founder equity voting control perspective? Silicon Valley gotten more founder friendly after all the heavy lifting and sacrifice. Handing over the baby is not easy. So the first issue that I'm going to address, Geo, on this one is that just because a startup hits $1 million doesn't mean a VC is going to be interested. A VC is trying to go from 0 to $100 million or 1 million to $100 million in 5 to 7 years. Does your company have that kind of velocity or the capacity or the potential to do a business with that kind of velocity? And if not, your business is not fundable. That automatically means that you need to work on a very large TAM, $1 billion TAM, to build a business like that. You may not, even just because you've reached $1 million doesn't mean you can get to $1 billion TAM or you can get to $100 million revenue in 5 to 7 years. Geetha's company, the way she presented it, has a couple of $100,000 in revenue and conceivably can get to $1 million in revenue with the services business model, but it definitely is not going to get to $100 million in 5 years. So that's just some level setting. The terms are a whole different matter. Terms, are subject to a lot of different details. Nick, I'll let you take this question a bit also, if you want to weigh in.
Yeah, I mean, $1 million in VC world is, realistically over the last few years is a late seed, maybe a Series A if it's, highly profitable, scalable revenue. Not all revenue is created equal. If you're, if you're $1 million services business, you're not fundable, right? And so I would say $1 million really doesn't mean much. I'm not sure it really changes the terms. Mathematically, VCs will always need to own somewhere around 10 to 30% of the business for it to make sense for them and the risk that you take on. And then so financially, I'd say $1 million is really not that meaningful. And then secondly, from a terms and conditions perspective, right? Every term sheet, every deal has two components. One is the economics, one is the governance. On the governance side of things, it's pretty straightforward. I think we've probably been as lax as we're going to see for a long time on the corporate governance side of things. We've seen some, probably pretty colossal corporate governance failures at places like WeWork that will probably swing things back to being more conservative. So I would say there's really not much that can really change on the governance side of things. It's just standard business operation. As a board member, I couldn't sign off on certain things and not run the risk of being sued by shareholders. So it's pretty straightforward, I think.
So the other question that you should take into account, Gio, if you are concerned about handing over your baby, the minute you bring in outside investors, especially if they bring in significant amount of money and you lose, majority control of the company, you're going to need to deliver to certain milestones that you have agreed to. And if you don't deliver on those milestones, they have the right to fire you. If you're the sole owner of a company, no one's firing you. But the minute you get into a shareholding structure where there are more than one shareholders and outside shareholders than yourself, it is no longer your personal fiefdom. So be aware of that as you are thinking through whether you want to go the funded route or you want to go the bootstrap route. There are a lot of companies, a lot of entrepreneurs who prefer the bootstrap route because they want to keep control of the destiny of the company, and that's a reasonable point of view. If you can build a bootstrapped profitable business, that option does exist. Chitra Singh, you are asking, should I rather open source software and make money on people's services using that software to start with SaaS and depend on partnership with other companies which will use that closed source software to provide services and hence profit share? Chitra, I cannot answer this question. Nick cannot either. We need to see your presentation, so why don't you sign up for a slot in one of the upcoming sessions and we'll look at it and give you more case-specific feedback. There is no general answer to your question. Abhijit Sengupta, you have said that today's presentation by the Nigeria presenter, the business model is it necessary to collaborate with telecom providers in the country for it to be successful, the microfinance business. As a distribution strategy, collaborating with telecom providers is not a bad idea because all these companies, all the MSMEs, the 17 million MSMEs that he was talking about do have phones. So that is and he's talking about a phone app. So yes, there's a case for doing something with telecom providers, but he first needs to figure out all the banking angles, which we raised in this discussion today. All right, I think we're going to stop. It's 4 minutes past the time when we normally finish. Very quickly, if you have questions about 1 million by 1 million, please contact Irina Patterson. Her email is irina@1mby1m.com, and she will answer all your questions about the program. Nick, thank you very much for staying and answering questions from the audience, and we will keep in touch.
Thanks, Rana. Thanks so much, everybody.
Bye-bye.